How's it been?
It's been good. It's been well, man. It's been really, really well.
Dude,
Last
so
week.
the first episode is live. What are your feelings? What do you think?
No, I think it's I don't know. I was laughing for a really long time when I was watching it. It was fun to watch. But honestly, as they say, you just gotta do it. Gotta start posting content, no matter what the quality is. So I think it was all right. I mean, we have
Yeah,
like 16 or 18 views in
that's fire.
4
I mean,
days.
I don't know. I don't know how it counts the views. It might be just me going to look for the views and it just counts 16 views. I have no idea, but yeah, it's a success, I guess, that we uploaded the first one. I mean, some level of success, I guess.
Yeah. And I wonder if people actually like podcast hosts if they watch the videos after they upload them.
I don't think so. I mean, I don't really. I watch it while I edit it,
Yeah.
and then it's just hard for me to watch.
Yeah,
Oh.
it is hard, I agree.
Maybe in 2 years, I'll revisit it and I'll be like, oh, that was on my mind 2 years ago.
Yeah. Well, I had to watch it, and I still have to watch it because I need to add those bookmarks to the episode. But honestly, it is hard at first, but I think once you like force yourself to watch it for the first 10 minutes, after that it becomes bearable. And then but it is interesting to see how you behave on camera, because I didn't know certain things about myself. Like I didn't know that I behave in that way, or it's and I'm talking about the body language, about the way I speak, and I think as we've touched on this, like our incentives and motivations for the podcast, and one of those was public speaking skills for both of us. And I think watching yourself and like watching those videos definitely can help you to withdraw some lessons out of it. So I don't know, it was useful for me.
Yeah. So as always, I think we're gonna start from the podcast updates. What are we doing? So the first video is live. We still yet to upload to audio, but going forward, I think the audio episodes are gonna be coming out first, and the video is gonna follow because audio doesn't take as much of editing, which we can just publish it, and then video might lag usually by a couple of days. So
Probably more than a couple of days.
yeah, so soon you're probably gonna be able to find us on Spotify, Amazon, Apple Music. Um, I'm actually looking forward to that.
Yeah.
I'm not a very avid user of those platforms, so it's interesting to see what the dynamics are there. Also, on YouTube, it's clear, like it's easy for viewers to leave a feedback, um, with comments and stuff, likes, but I don't know how it's gonna happen on audio platforms. Maybe we should post an email or something so people can contact us.
I think we should definitely. An email would probably be too formal. I think Twitter would work pretty good.
That's true,
right? Because it's way easier to tweet at.
So we probably should get our Twitter game up.
Yeah,
I have like 2 posts in 2018 maybe on my Twitter, just mainly saying bad stuff about Russian government. That's it. So and a couple of new ones after the war started. So
I see. But I guess so. You mentioned the interaction of how audience can interact on Twitter. There's this app. I forgot what it's called, but we can probably put it in the description on our video. It's basically it was a start. I mean, they're still an early stage startup, and it's like basically a podcast platform. It's a podcast mixed with social media platform, so you can interact. You can like comment on certain like clips or like certain minutes and seconds in the video, and it's similar to how you can do it on SoundCloud. You can react at certain moments. With this one, you can leave again comments. You can interact with other users. So that one's pretty cool. I actually used it for quite some time back in 2018, 2019, but then I don't know. It didn't really progress well for them, I think.
Interesting. So as you guys can see, probably we changed the room that we're filming in. The light situation is still kind of messy. We're gonna fix it maybe on the next episode or an episode to follow. We're gonna get our professional lights. The spending is getting kind of crazy.
Yeah, the
Judging
lights are gonna be what, extra $100?
extra 100, maybe more. And yeah, there is a lot. But we are trying to bring you guys the best experience, the best visual experience. So that's what we've been working on. The background is blue. That kind of makes the lighting situation even worse. But I think we're gonna fix it.
Yeah.
Also, I'm planning to install like sound panels on the side walls, so that's gonna make it look better and sound better too. But I'll probably skip doing that for a couple of months because that's a good to have, not a must have. I think the light is a must have, I'd say.
Yeah, and I think with sound, I think so far that sound has been great. Like when I was rewatching those videos, I didn't notice.
Yeah,
any.
and those first videos, they were we handheld the microphones, and you could hear those like cracks when we are
Little bit,
moving to
yeah.
microphones. Right now, that should be fixed.
Yeah, and it's way easier.
Oh yeah. So, so far, how much did we spend?
I think last time we counted it was $800. So
800.
with the lights, it's gonna be extra 100, so close to 900. And I think we're probably gonna top at 1,000. We should probably be pretty much all set, right?
Should be. Is there anything else that we wanna include? I'm thinking maybe at some point. I'll not even go there. It's gonna be a surprise, I guess.
I think with the guests, we talked about if we want to have guests, then we'll have to buy an extra microphone and the sound system or
Sound interface.
sound
Yeah,
interface. Yeah.
for sure. That's a lot of money though. I'm thinking of the ways to kind of circumvent that and maybe do it simpler. Simpler setup. Maybe I just don't want to buy a new sound interface.
Yeah. No, I agree. Because this one was, I think, 200,
170 something like that.
170. Got it. Yeah. No, but we'll keep. I guess we'll keep the audience updated.
We also need to probably buy the headphones so we can control the sound of our voice. Because as you said, when you were going through the video, you said that the sound levels were kind of funky. So I think if we get the headphones and we always wear them, we can hear the feedback, and we can adjust our voice so we can hear it in the headphones. So
Yeah.
I think that's our next investment too. I think I have a pair of headphones. I just need to reach out to a couple of friends to see if they have it. I just gave it away.
I guess for me, it's more about how long will it take for us to get used to it, right? Because if you can hear your own voice all the
I
time.
don't think it's that bad. It's
Okay.
so the feedback because it goes through the sound interface. It's pretty fast, so it's pretty much as you would normally speak. It's a little unusual,
Yeah.
but it's just you hear yourself anyway, right? You'll just hear it in a little bit of a different manner. That's gonna be a little tricky. Other than that, fine.
Yeah. Is the voice? Do you think the voice is gonna sound a little bit different from?
It's gonna sound like shit, but every time you look at yourself through the camera or hear yourself, I don't know, maybe just me, but every time I hear myself through the camera or see myself, it's just cringe every time.
Yeah, it's for some reason is uncomfortable a little bit, right?
Yeah, it's
Yeah.
like they say it's because you pick up more than everybody else picks up, because you can look at the other person and you'll be fine. Like when I look at you through our recordings, I'm like, that's
That's
normal.
just how I am.
Yeah,
Yeah,
that's just how you are, and it's just like
It's
it's
interesting,
okay.
yeah.
You sound fine, and
Yeah.
just like you sound in real life. And then when I look at myself, I'm picking up everything, like every moment, and that's because we judge ourselves more. We see ourselves more. We
Yeah.
see every little imperfection of our faces, our gestures, voice.
I think it's also how you see yourself in your head versus how you are in real life. And but yeah, I agree, because you can also, like, you have your own thoughts and no one knows about your personal thoughts except you. So yeah, I agree. It's just the real picture may be very, very different from what you're thinking about yourself.
Especially when it comes out on the video and you try to say something, try to get some thought to the other side, and then whatever got through is not really what you meant. For example, in the first episode, I was talking about something like, oh, nobody cares about like um, those P&L statements of companies. They just speculate and stuff like that. There is certain things that I meant to say, and the things that I said were not.
I no, and I noticed that as well. With what I was when I was saying or making certain statements, it's because you're it's like you're thinking and you're speaking simultaneously, and then whatever you say may not truly depict like what you think, your thought process. And it brings me to a thought where, like, how it is really hard for public people, to, and I'm talking about politicians or celebrities, and because whenever they express their mind or make certain statements, like, you have to be very, very careful, because all those people are listening to you. They're just waiting to, like, get something out of the context and then use it.
Especially for politicians. Can you imagine if you're running for an office and people are asking you about an issue that you're not well prepared to talk about, and
It's definitely a skill. Yeah.
But for them it's kind of corny. Like every time I watch them, they're like, they have those tricks where they say something but don't say anything at all. They just repeat you the question with, like,
in a different way,
statement.
Those are usually general statements. And you
Yeah.
can't really understand what they,
Like
what they stand for.
or they would ask a politician, like, what do you think about homelessness issue? And he'll respond, yeah, the homelessness is a big issue. And people are like, okay, yeah. And he'll talk about it for like 2 minutes, not saying nothing at all, pretty much, of substance. But then he kind of talked about it.
It's definitely an art and skill, it's not, I guess it's not easy to do. And for me, in my job as well, like, whenever you talk to, let's say, your clients or investors, whatever news you're bringing to them, you have to bring it in a certain way, right? And you have to understand how to do it correctly, not to, let's say, cause any or not to give a bad impression, or like not to oversell it on the other side. So it definitely takes a lot of, like, practice and skill to develop your speaking in a way that well
yeah, exactly.
I guess I still have to work on that.
For sure. Yeah.
Cool. But we are today on our episode 4. Today is May 22nd, Sunday. And last week was pretty crazy, more in regards to the stock market. I think the week before that we talked about crypto, and you told us a lot about the Luna and the Terra, the whole situation. I guess this past week, more eyeballs were in the stock market, because I think Dow had its 8-week losing streak, which was the longest since 1923. With S&P 500, it was
So let's explain through what the Dow is. So the Dow is like an index, right, of stocks,
mostly in the industrial sector.
industrial and tech, right?
Tech, no,
No?
NASDAQ is
Oh,
represents.
NASDAQ.
Yeah,
Okay.
NASDAQ most represents
So
tech
Dow
sector.
is industrial. So that would mean manufacturers, car manufacturers, furniture manufacturers.
Steel manufacturers, like raw materials manufacturers.
Okay.
Yeah, mostly those guys. And yeah, and then Dow represents industrials. It's usually like the one of the backbones of economy. With NASDAQ, those are tech companies, and S&P, I think it's
Because
a mix.
people are throwing those around and see, I didn't even know that Dow doesn't include tech. I was confusing with NASDAQ because I don't really think about them that much, I guess.
Yeah,
But it's important to understand. So when Dow falls, it means that the investors, or the investor is a term, is like a big word. Like people of the United States and companies of the United States or the world are not as bullish on industrial manufacturers and stuff like that.
yeah.
So
And I think it's important to mention that is tied to the performance of the companies, and performance is tied to generating revenues and cash flows.
it could be tied to performance, as I was trying to tell in the first episode. So whenever the Fed is printing money left and right, it doesn't really mean that. So and the stocks are exploding, everything exploding. Like, doesn't mean that they are fundamentally sell more. It just people, those banks, big corporations, they get money for the bonds and they have to deploy the money. And when the money gets into economy, people are trying to buy assets, and they just need to buy something of productive value, let's say, something that can make them more money potentially. And it's hard to deploy money like straight into production, let's say. So they reserve to like buying these assets and these assets to kind of grow their balance sheet.
What do you mean by like investing in production?
So like well, let's say you are a big company, right? So like a big fund. You need
Exposure into different like asset classes.
no, I meant more of like, so if Ford valuation got more money, Ford corporation
Got a higher valuation.
higher valuation, doesn't mean that they produced more cars, right?
Right.
So this money has to.
Well, usually, I mean, ideally, in a perfect world, it does, because it represents basically the price of the stock represents discounted, sum of discounted future cash flows.
It does.
Yeah, in
But-
ideal world, or theoretically.
But theoretically, and maybe over the long time horizon, it does. Except whenever the the Fed printed, I don't know how much, like $6 trillion
dollars,
or
yeah.
even more. Whenever that money appears in the market, the valuation is gonna grow because people are trying to get more money, and they have to park money somewhere, because otherwise it just loses value due to inflation. And so they would put money into Ford, but it's gonna take time for Ford
To catch up.
to deploy that money into like building more cars, better cars or whatever. So if it's just a spike and it falls back down, I don't know if Ford could like capitalize on that spike, right? So they probably got better loans, like they can deploy more money towards this and that.
Yeah.
But how fast can they do that, right? To build a new plant for Ford probably gonna take like a few years, and then the spike came down like sooner than that. I don't
Yeah.
know.
So you're trying to say that once basically we had this bull run, right?
Yeah.
And the bull run since middle of 2020 was mostly fueled by Fed printing money.
Yep.
And then people had to put that money somewhere, right? And so as we know, and with our friends, and like probably when I was writing or taking Ubers, those Uber drivers would talk about how they invest in certain stocks, right? And
Every Uber driver is a crypto investor.
a crypto investor, right? So they had to allocate those money from stimulus checks, which we actually discussed on a couple of previous episodes, somewhere, and which led to an increase in the stock market. I mean the stock market prices and all those indexes prices went up. And so you're saying that even though those prices went up, you're trying to say that, like with the Ford example, they might not be able to catch up with that hike in the valuation on time.
The other example would be, so like you're saying it's based on cash flows, discounted cash flows and stuff like that. That's true, but it also, like in the past 2 years, I'm just saying that it was more based on Fed printing money.
Yeah.
And
No,
like in
that's
venture
true.
capital, right? The software as a service valuation. Like a year ago, or maybe like 5 months ago, you could raise money at 100 times the annual revenue. Right now, maybe 15 times, maybe 20 times.
Yeah.
If you're lucky, maybe 10. For public companies, it's like 7 or 8, I think. So you're not going to be able to raise that much money. And those companies, they're not producing less now. They weren't producing suddenly more. Just there were much more money in the system.
Yeah, and and this is a function of supply and demand, right?
Yeah.
The supply of money in the U.S. economy increased, and that's why we had this inflated prices and valuations of different companies. Right now, because of the interest rate hikes, the cost of capital has gotten more expensive, and we're also experiencing inflation. So the economy is slowing down, and when it comes to valuating those companies or looking at the market caps of public companies, investors are going back to kind of like the average standards, average multiples, right,
Mm-hmm.
across the past like several hundred years. So right now, we're going back to like fundamentals. We're actually looking at statements. We're actually looking at the revenue growth, the net profit growth, and things like that, and valuing companies based on those indicators. And that's why we are experiencing this the decrease in stock market overall. So from your point, I guess, or from your perspective, I agree, because the Fed printed a lot of money, the stock went up, stock prices went up. Right now we're kind of coming down to normal and standard practice of evaluating companies based on its fundamentals, and therefore I think it's a healthy thing that it's going on right now.
Oh yeah. It might not be
painful.
healthy. It
It's
is
painful.
super painful. It might not be healthy for a lot of people that got caught with their pants down. Some people could have margin calls and could lose all their money that they invested in stock and were super high on, like, I'm making so much money, and suddenly it just disappears.
But that's a good reality check.
Yeah.
Because
I mean, I wouldn't want that reality check. So luckily I had no margin, didn't deploy any margin. I actually was very, very passive with my investments. I didn't really deploy any money towards stocks or crypto. I mean, I have a lot of crypto, but it's mostly in stable coins. And so I didn't get hurt at all yet.
So what were the drivers behind the decision not to invest money in the past 2 years? Because it's hard to do when you see like that people are making so much money with the bull run.
It is. At some point I just sat down and I thought to myself, it's cool and all, to invest money in stocks and stuff like that. I just want to save money and deploy it into my own enterprises. So, for example, this podcast. So, I mean, to pull out $1,000 just to start something new, that's not that much money, but it still kind of takes.
Yeah.
So, my general idea about stock investing, I don't sell. I buy and I just keep it there.
Diamond hands.
Yeah, diamond hands for sure. And so whenever this is your strategy, I found myself that it is hard to evaluate the alternatives because okay, I invested into stocks and I'm earning like 15%, let's say 20-30% a year.
Yeah.
And I'm like, okay, so if all of my money is deployed in stocks, is it justifiable for me to pull out even $1,000 to start a podcast? I don't know. I'm probably not gonna make money with that for the next year or two, right? Like to even get money back. And it kind of started to slow down my decisions. So, for example, right now I'm doing like a crypto exchange business, and I couldn't possibly do that if I had all of my money deployed in stocks. I would have
Right.
to sell it, and sometimes you have to sell it at a loss, and you don't want to do that. So I prefer to have like a I prefer to be more
Yeah.
cash heavy and deploy money into initiatives that I control personally at this point of life. So I'd say if I had like extra $100,000-$200,000 on my bank account, I'd probably deploy it into stocks. I probably
Yeah.
don't need it like straight away. Or maybe if I had that much money in my bank account, I'd find places to deploy it. But I
Yeah.
prefer some things that I control that I can touch and
Well, I mean, as I think Buffett said that I don't know, 10 or maybe even more years ago, he said that to hedge against inflation, the best investments that you can make is actually investment in yourself, like your self development and like starting your own things
I think
or
he meant like learning and stuff.
and learning and stuff as well. But I mean, whatever, yeah, like educating yourself. I think starting your own things, as you said, because you can control yourself and I mean not yourself, your activity and it can also have a really large upside, and the downside would probably be limited unless you're taking a loan for that. And it's also an educating experience, right?
Yeah, I also am a follower of this thought. I think I heard it from Martin Shkreli. I don't know if you know who Martin Shkreli is.
Who's that?
So the guy just got out of prison. That's something you have to know about it. So
Okay.
Martin Shkreli, he was, I think he had a hedge fund in New York, and he got famous. I don't want to like slander or anything, but because these guys are big. But I think he got famous because he bought a pharma company, and he raised drug prices like 50
Oh,
times
yeah. That was for
for some
drug against diabetes.
maybe. So what his angle
Yeah.
was, I'm just trying to screw the insurance companies. If anybody really needs that drug, I'm gonna give it to them for free. Just email me or something like that. He's like, I'm just gonna screw the insurance companies. He was trying to expose like system that it's imperfect, that the drug prices are high because of the insurance companies, stuff like that. I think that was his point, and of course he was making a lot of money. I'm guessing from that, from raising prices that high. And so he started speaking about it, and then there was this. So he was called to Senate to present his point of view, where he just kind of ridiculed them there. So he agreed to go there, and for every question he denied to answer. Plead the
Oh,
fifth.
I see.
Yeah. So every question they ask, and it's televised, and like he just trolled the Senate, and I think that's what he went to prison for. Really, like I mean,
How long was he in prison for?
I think 3 years.
Okay.
Yeah, I think he was sentenced for like more 7, 8 maybe, but
Mm.
COVID and maybe good behavior and stuff like
Yeah.
that. So his nickname is Pharma Bro. But that's beside the point. And he actually started doing like streams. And he was explaining like investing 101, kind of was his thing. And what he was saying is the retail investors are idiots. He's a very uh,
Eccentric.
very eccentric. Yeah. So he was like, "Oh, retail investors are idiots. That's a waste of time, waste of money. They just like those hedge funds are just laughing at you guys and stuff like that." And what he was saying is, if you're trying to invest $1,000 or $10,000, trying to get rich from that, you're a fucking idiot. That's what he was saying. And that is actually what I think is true. So like if you're trying to save money in the stock market, maybe that makes sense. Or just like get a little bit of money, extra money. But then you have to have a way to sell it off. Or if you never sell it, just invest. But then, as I was saying before, like how are you gonna start your own business and stuff like I don't know, like I'm still.
Well, I mean, stock market is very liquid, right? It is
It
super
is liquid. It just what's your investment strategy, right?
Exactly. I think it's definitely because some people treat it as a gambling
Yeah.
practice, right?
And so
You can't do that.
there was also it was him and the same idea I heard from a Russian billionaire, Chichvarkin. Maybe you know that guy. So what he was saying is the way to make $1 million is gotta borrow $10 million, uh, buy something for 10 million, sell it for 12,
Yeah.
take million to yourself, and give back 11 million. So, and that's how pretty much the stock market works, right? So they would take 100 billion from you, they would give you back 110 as 10% a year, blah blah blah, and then they would keep 10. Pretty much, that's the strategy, I guess. That's the idea, and that is actually so like that's a very realistic way to think about making $1 million or multiplying your money in stock market. If you invest 10 million, it's pretty realistic for you to get 11 back in a year. Maybe 12. In that case, you can make $1 million. But if you're investing $10,000 and you're looking at 10% a year, I mean, compound interest is cool and all, but like,
Well, I think again, I think it depends on how much time you spend on this and what your background is, right? Because I do have friends who, okay, maybe they didn't put in like 10,000, they put in $30,000, and then they did a very thorough research, but they have most of them have financial background, so they know
I
how to
mean,
do research.
$30,000. What are you gonna make it from it?
Yeah,
a
they
year?
made the guy that I personally know, he made like 30 on top of that, so he pulled like
That's
60
not.
down.
That
60K.
is maybe like a one-off. It just so if we are going off, like, okay, the stock market spins out 8% a year, and then, well, I would agree that it is realistic if you dedicated your life to it and you're really good and maybe you have some insight to make 20% like year over year for a long time on small sum of money. Still not life changing unless you deploy like $1 million, and even then,
Yeah,
like
but
two hundred thousand dollars a year.
you can talk about anything like that. Okay, if you if you invest 10,000 into your, let's say your own venture, like your own thing, like how long will it take you to actually start generating significant amount of money? Or like your venture still requires, like you would have to take out a loan. I mean, you can start something for
So
10,000, but when are you gonna generate? You can't get rich quick of it, you know,
yeah,
in a year or two.
so here's the thing that um with your own venture, at some point you can deploy other people's money, right? So it doesn't have to be your money.
Well, you can do the same with stock market.
Not really, because it doesn't generate cash flow, right? Or
Well,
I mean, not really.
well, yeah. If we're talking about dividends, they are gonna be
So, for
low.
example, let's say my friend buys and sells cars, right? Maybe we'll have him at some point to talk about it to us. So that's the business where, okay, just playing with numbers, probably not realistic or true, but let's say he buys a car for $5,000, right? He makes it a little bit better and he sells it for $6,000. He just so like a gist from my friend. In order to make money in that like industry of buying selling cars, it doesn't really take that much. It's like you just buy a car, you wash it. So what his game is, he goes to some village outside of major city. We're living in Los Angeles, so he probably goes to like somewhere past Orange County or maybe like
Yeah.
Lancaster or Santa Barbara or whatever. Buys a car there, brings it to Los Angeles. Immediately, it is worth more just for him bringing it to Los Angeles, which is very fascinating. People are not gonna drive. So like a regular buyer is not gonna drive an hour or two to buy a car. So immediately it's worth more. He just washes it, replaces some broken parts, maybe, not even often. Makes good pictures, sells it for 1,000 more, 2,000 more. So he deployed 5,000, he sold it for 6. He gets to do that again. He only
Yeah.
needs 5,000. He can do that, like he can sell like 5-10 cars a month with that 5,000. And so by him selling, let's say he adds 1,000 to a car, by him selling 10 cars a month, he adds $10,000 to his account, right? He only deployed 5. Can you do that in the stock market? With the small money. I'm not talking like millions of dollars. With
Yeah.
small money, like if you only have 5,000 to invest in the stock market, that's not that smart, I think. If you have 10 million, 100 million, of course you cannot do those same things. So like if you have $100 million, you might as well invest it in the stock market or some company or something like that, because for you to deploy $100 million, it's going to be the same probably. Return is going to be like, maybe it's going to be 25% instead of like 15% if you invest it in a good company. It's just gonna take you way more effort. In that sense, it might make sense. If you're deploying $10,000, I mean,
I mean,
on the street. So, like for example, also, I have this exchange business, right?
yeah.
I maybe have like 20,000 in it, 40,000 maybe, maybe 50. Yeah, I'm thinking how much
Maybe
I have
100.
in it. Maybe 40,000 with me and my partner. Um, So, but it circulates like this 40,000 circulates like 4 times a month, 3 times a month maybe, on a good month. So like and I get to generate like, I don't know, like 3% um on the circulation. So my margin is 3%. So I get like 9% a month from like my 40,000. Where would I get it? And it's cash,
Yeah.
like liquid cash, not stock, not whatever like paper or whatever. It's just liquid cash that I generate. And
Well, yeah, no, I see what you're saying, and I mean with like small, I guess, cash businesses where like you buy and resell, that makes sense as long as you're reselling at a higher at a pretty good at a good margin, right? The thing is like not everyone has access to like either those entrepreneurial friends or just friends or those opportunities, right? Whereas with stock market right now, it's way easier to, or I guess with the apps available right now, it's way easier to access stock market, and it's way easier to put
I
a certain amount
agree.
of money.
I agree. I just think that's not the way to go if you want to make money. If you just want to park money to save it, that's good. If you really want to make money, maybe expand your network. That's
Yeah, you're not gonna. Yeah, I mean, if you just put money in the stock market, again, you probably want to buy like S&P 500 or some index, and yeah, that's gonna generate maybe 8 to 10%. I think is what the
not
average
this
standard
year.
was. Not this year, not this year, but on average, right? If we're looking over
That's so. That's my
100
point. If you
year
deploy it for
standard,
like 20 years, then it's
yeah.
gonna give you 10% a year. If you invest it now, I don't know. Maybe it's gonna go up. Maybe it's gonna go down. And like if you are actually trying to save for like long time, maybe it makes sense. If you will need your money within next year or two, I would not buy stocks. Just like the money you don't need for the next year or two.
Well, I mean, again, but it's very liquid. So what do you mean by
It is
if you need?
liquid unless it goes down, right? And then you don't want to sell.
Well, then yes, ideally you wouldn't
So
want
the
to sell, but
liquidity, the technically the liquidity is there, but liquidity is not here, right? Whenever it goes down. So like
yeah, you don't want to
this
sell
is
at loss.
like real estate can be more liquid than this whenever it goes down, right? So like there is liquidity and there is like your emotions, and your emotions are something to think about, right?
Yeah. Yeah. Well, I guess what the drawdown? The drawdown is expanding your network. If you don't have the network, you still want to invest money, put it in the stock market. Um, and if you're buying individual stocks, I would say definitely do a lot of research. Um, and if you just want to have like uh, or be a part of that stock market game, then you should probably invest in like ETFs or basically index funds or such
Yeah,
as
if you're
S&P.
not trying to look at the your stock portfolio every day and scream in agony, then just buy whatever index and hold it for multiple years. Also, Elon Musk recently posted that you should probably buy companies that you use the products of and you really enjoy it. And once the product's quality declines, just sell it.
Huh,
And
that's
that's a good strategy. I think it's not always gonna work for you, but in general, that's a good
well,
strategy.
honestly, if when you do a research on a certain company, especially if it's a consumer company, that's what that's what investors do as well, like as a part of their due diligence or research. Comparing CVS to, let's say, Walgreens.
Same
You
stuff.
pass by CVS, it's usually crowded. You pass by Walgreens, and they might be on the same corners. There's like no people at Walgreens, or way less, way fewer. And
Or
then
otherwise. It might depend on the location.
usually, I would argue, I mean, CVS is more popular. I don't know about the quality. I think those are the same things, but probably CVS has a better brand name than Walgreens. But what I'm trying to say is, yes, like you go to and you walk into physical locations, you check the traffic, right? And then you check the prices as well, products. So yes, if it's a consumer company that you're investing in, and you are a customer of that brand, yeah, you can judge by yourself. Like, and I was even thinking about it recently, with investors. So for example, when it's interesting how investors are, like, they invest in certain companies that they are customers, they could be customers of, but at the same time they may get like blinded by the fact that the company may experience growth and they may not notice certain risks or like that the product is not good. And with my experience, it was like it happens with startups as well. Like if we invested in a couple of consumer focused companies, and one of them produces like a special VR display, a VR monitor that has a really expanded field of view. And when I was testing it, it looked really cool, but at the same time, it was still a prototype, right? And it wasn't like mind blowing, right? And then the time passes by. Before the time passes by, so we still invested in the company, and we knew that the product was not something that we would use right away at that time, but we still invested because we had this like vision of, oh shit, like what if it blows up? What if it goes up?
Yeah, but that's private markets, right?
That's private markets, yeah.
Because by the time it goes public, it's too late to like sell. I mean, the company should still sell vision, and we're going to this, and Tesla is going to revolutionize the world. Everything is going to be electric, self-sustainable, and stuff like that. But the product should be good already. And most of the watchers probably, I don't know what kind of watchers are we gonna attract, but probably most of them are not going to be private sector investors. Actually,
well, knows? if you invest, you talked about small businesses. If you invest in a small business, which are private businesses, could be private investments as well, or private market.
Yeah, that's true.
But we've touched a little bit on the retail sector. So I know that this week, probably some of our listeners know that Walmart stock went down a lot. Target went down a lot. Target had the worst day in terms of the stock price movement since probably in a decade or more than a decade. They went down by 25%, and then I think their net profit decreased by 52% this quarter compared to the Q1 of 2021, and that's all cause of our old friend inflation.
That might not be just inflation. So you said their profits went down?
Yeah, so the net income went down by 52%.
Yeah, the net income must be closer to the consumer then. Yeah. Yeah, that's horrible for them, but I mean,
but what's interesting, what happened is, so the sales grew a little bit, but I guess what the interesting information is that the buyers, the customers, they stopped buying more expensive stuff. Talking about electronics, talking about maybe some expensive furniture, other equipment, and they're more changing towards private labels first because they're cheaper, and then second, they're just buying more of essential stuff. So we'll already see that slow down in consumer spending, which is like something to be aware of. And
that is something I have also seen on Twitter. So like the retail must be suffering because I heard, I mean, that's Twitter news, whatever, just people just talking shit, but it might not be true, that some Amazon warehouse, they used to send off 75,000 packages a shift, and now it decreased to 50,000. So, and they deployed the like hiring freeze throughout this facility, I guess. So from 75,000 to 25,000, that's 30% down
to 50,000.
Yeah, that's huge. That's so like if that's true and if that's gonna persist, because we are supposed to be entering the increasing spending because we just passed the tax season. So we're supposed to start increasing the spending because people should have more discretionary income in their hands, and they should start spending more, and that should like
Yeah.
skyrocket towards New Year's. That's how usual like retail cycles go, and it's usually very slow up to April 15th, from New Year up to April 15th because of the tax season, and people are just recovering from holidays.
Spendings. Yep.
Yeah, so it is very troubling to hear that the retail spending goes down so hard after the April
Yeah.
15th.
Yeah. And again, the prices are going up for everything, and we've, like, you and I experiencing it, right? We talked about it before the podcast, that you wanted to, I guess, install some or put on some shelves, right? Because you've just moved into the new
Yeah.
apartment and you're thinking of putting a hold on that.
Yeah.
I'm doing the same. Like, I also moved into a new apartment a couple of months ago, and we're still furnishing it with my wife, and so we have the bedroom set up, but for a living room, still have to buy a bunch of stuff, and probably gonna either look for cheaper options or slow down on
Yeah,
it.
and I didn't even get affected yet, so I didn't really deploy much capital into stock market or crypto. I'm still getting paid the same. I'm about to renegotiate my contract at my job, which is pretty
Oh,
bad
really?
timing, I guess. Um, it depends, but yeah, I'm putting brakes on spending too, which actually exacerbates the problem, right? Because I mean, if everybody is like, "Oh, let's not spend as much," the market goes even further
Yeah,
down.
it's sort of a vicious cycle or
It's
vicious
always a vicious
circle.
cycle with those
Yeah.
cycles, right? Like if there is a bank run, everybody starts to pull out the money from that bank.
Yeah, it's a panic. Yeah.
And the market, same thing. Like
And what's
what
interesting,
happened
the
with Terra.
mass media definitely doesn't help with that, or helps it a lot, right? Because you're seeing all this loud headlines saying that, oh my God, the world is gonna end, and that definitely affects your perception of what's going on, right? And you're like, oh shit, I should probably be saving more money now, because everything goes up.
Yeah. Also, back to inflation. It is interesting. I mean, the retail market drop. It is interesting how. What's the leading indicator? What's the lagging indicator? Because also my friend that is selling cars, he was telling me like 3 weeks ago that nobody's just buying cars anymore. It used to be like he would buy a car, sell it the same day, like buy a new one on the same day, sell it the next day, and stuff like that. It doesn't happen anymore. He's like, oh, nobody's just buying any cars, and
Yeah.
that is very interesting. Why? Because I wouldn't think that much people got like retail like customers would get very much affected by that yet. But there must be something happening in the economy that even the like the middle class that's not well invested in all that already feeling the effects of retail, because Target and Walmart dropping their income dropping, and Amazon dropping their shipping numbers,
Yeah. Yeah.
that must
Well,
come from retail customers.
yeah, no, for sure. And I mean, look, I think it's as simple as price goes up, it's more expensive. The sales slow down, the consumers stop buying that stuff, or like switching to something that is less expensive. And then I think, yeah, like small businesses or entrepreneurs of small businesses, they can probably feel it earlier than any other people, because, or if we're looking at this a Target, right? It's a huge company, and we kind of see those results on a quarterly basis, right? Whenever
Mm-hmm.
they come up with those reports. But I'm sure, I'm sure internally Target and all those retail stores, they can, they have those internal numbers. They just look at the financial reporting and see that, well, the sales go down like a week by week. And they also know when they're going to increase the prices, right? So they kind of anticipate that already. And but what's interesting is, I guess, and that point, that is the point that I wanted to make earlier. Like, we can judge the economy going forward, or we can judge what the outcome is going to be in the next, several months to a year, just based on our own behavior. I mean, if we're in the middle class, yeah, like if we're super wealthy, it's probably going to be different. But if I start buying less, or if I'm like, oh shit, the gas went up, it's going to hurt my wallet, right? It's going to, like, I have to stop spending less or just drive less, then it already has to trigger in your mind that, okay, that's probably going to be true for 80% of people. And then you have to think how that's going to affect the economy.
See, I'm at that level where every time I go to the gas station, I still cry a little bit when I see the number, but it doesn't really change my driving behavior, right? So I don't know, like I never thought of like, oh, people are gonna drive less. I don't know, like I'm not that in touch at that level, I think.
Okay, well, but at the same time, you could think, okay, for me, it's still fine. I'm not gonna drive less, but let's say if I made $20,000 less in a year, then it probably would affect me in some way, right? Or like I'd be switching to Priuses and this EVs instead of just driving a all gas car.
Maybe, I don't know.
No,
I don't know.
it's for me. And if I see that, okay, the price per gallon of milk went up, like I may think about buying a private label brand or private brand of that store, then rather than buying just whatever I'm usually buying. And so I think whenever you're thinking about those changes, it's just be sure or think about how it also affects almost every other person in this country, and then how the aggregate effect of it is going to affect the whole economy.
Yeah, maybe. Just hard to think that like that. And you're not involved in most of the industries, right? So like, I mean, the gas prices are going up, but they're already up. So there was a whole chain of events that led to gas prices going up, and that's priced into multiple things, right? Already probably, and into stock markets for sure. So like maybe some of those indicators might be too late for you to catch that moment and capitalize on that.
Still, I guess, just pay attention to the small things and how your behavior changes. I think it's a interesting exercise.
Yeah. So Target and Walmart are screwed. What's next?
Yeah, Target and Walmart are screwed. The whole retail sector is kind of screwed.
But you're still buying
Target. Yes, I bought some Target stock. It went down a lot. It's gonna go up. I don't know when. It's
not
a matter
a
of
financial
timing.
advice.
Not a financial advice, definitely. But yes, I bought some stock of Target. But I guess moving to the next thing, tech job layoffs.
Yeah.
There's I think it's a third or fourth week for the tech sector where they, keep laying off people. Kind of started with Netflix after we talked about it around a month ago, right? When they laid off, or when they lost 200,000 subscribers, I believe. And they announced that they're going to lose 1 million or 2 million more this year. So the revenues, obviously, and sales for them went down. They had to cut their costs, start laying off people. Same is happening to Carvana, and a bunch of other tech companies. Do you remember any other ones?
Carvana is a big one. Better.com. There's Rocket Mortgage is laying off like 4,000 people, I think.
Oh, Robinhood as well. is what I've
Robinhood
heard.
as well.
Yeah,
Shit.
Robinhood is laying off people too.
Wow, that's horrible. I think I like Robinhood. I just I have mixed feelings about Robinhood for some reason. I don't know. I
Like the
love
way
it
they
and
make
I
money?
hate it. No, actually, just the app itself. I think it got
The
worse.
user experience.
Yeah, the user experience. I think it got worse. The business. I don't see the hype behind it as I saw before for some reason. Maybe because I'm not investing as much anymore.
Well, also because there are way more competitors now, and also because all the major, what do you call those brokers? They've brought their fees down to zero.
Then those brokers suck anyway. I don't know. Like, what are gonna use? Fidelity, or Vanguard? It's like,
E-Trade, Charles Schwab.
yeah, they suck. They all suck. But compared to decreasing value of Robinhood's user experience, Robinhood is still like 100x from all of those
Yeah.
companies.
But I guess what I'm trying to say, if you already had an account with them, and like let's say because Robinhood had zero fees, you would still switch to Robinhood. Now you don't have to. So if you have an account with them, with Charles Schwab or any other competitors, you would just stay with them.
That's true, and also I think they offer better terms with loans and stuff. I'm not sure about that, but
Yeah, I'm not. Yeah, I
with
don't
the
know.
margins and all of that. But
With Robinhood, I saw it yesterday. I think for $5, if you pay $5 monthly, you can get a margin of up to $50,000, depending on your account and how much you have in that account. But I think that's something new because at least a couple of years ago, they definitely did not have that.
they didn't.
Yeah.
Maybe. So maybe they're adding new products. They still cannot figure out the crypto thing. Like you cannot like withdraw crypto from Robinhood yet. So
Well, what do you mean?
so you can buy crypto on Robinhood. You cannot get it to your decentralized wallet.
No. You can now.
You can now.
They created wallets and.
When did they do that? I was looking at it like a month ago. We didn't have it.
No, they do. They do now. Yeah,
Yeah.
maybe actually within a couple of months.
Mm-hmm.
So I'm quite sure because you can now create your you can create your own wallet there, and you can basically send it from your wallet too.
Okay, maybe
Yeah,
I'm wrong,
so.
but took them long enough.
Yeah, it took them a while.
Yeah. Okay. Yeah. The layoffs. We actually, the company I work for, we are picking up quite some people from all of those companies. So these people,
Okay.
like, if those people are in technical roles, engineers, product managers, designers, UI UX, managers of engineers, these people are not gonna have problems. I mean, they might be slower to get a new job, or maybe will not get paid as much as they could like a month ago if they changed jobs. But for them, it's the sun is shining bright still. For those people, for operational people, I don't know. It's gonna be challenging. Even those companies that doing layoffs, mostly I think they are laying off ops people, like operations. So if you're an engineer, I think you're solid. If you're doing something else, that's gonna be challenging.
Yeah, and I think it's always an opportunity. Whenever there are mass layoffs happening within tech sector, especially. And as you said, like for engineers, especially for I guess senior level engineers, it's not a problem of finding another because like some other
the problem
companies
that senior
always ready to
engineers are
pick
not
them
gonna
up.
senior engineers are not gonna get laid off if they're good.
Yeah, I guess unless
Maybe
the
they
company is
will.
failing.
Maybe they will if the projects get shut down. They can lay off those senior engineers. They probably will try to keep those. because hiring a senior engineer is expensive.
When do you think we'll have a parity with this like technical jobs? Like when do you think we'll have enough of um, senior technical engineers in this country not to basically and get rid of the scarcity?
Hopefully never. Uh, no, but that's true. If the tech sector grows, you always need new engineers, and the complexity of projects grows with the tech sector too. Like there's more and more complex projects. Actually, like before, so right now, what they did in the tech industry, um, so it used to be a junior engineer, a mid-level engineer, and a senior engineer. That's that's changed like a year or two ago. So right now there is a popular thing to do. So there's two tracks now, and you can progress as an engineer. So for example, an engineer can go from junior engineer, mid-level engineer, senior engineer. They added a staff engineer and a principal engineer.
Hmm.
So they're expanding this horizon, and like staff engineer is probably like 10 years experience. Like principal engineer can have 15 years of experience, and those people are mainly doing like architecture of projects. And with so we have more and more products in like that help with development. So for example, payments are super easy right now because of Stripe, for example, right? AWS makes like deploying servers and everything easier, but those new products add to additional layer of complexity in a sense, and there is a lot of thought that goes into orchestrating that additional layer um, of tech. And as we add new layers to that, it's not necessarily getting easier. You need people with more experience understanding product and tech to combine those and
Hmm.
give you the best result. So, for example, it's like I don't know, like 10 years ago, it would be crazy hard to deploy throughout the United States and have like I mean, I'm gonna get too technical probably, so I'm not gonna go there. But so like to have servers running in the United States, South America, Africa, maybe Europe, Asia, and have them all communicate to each other. Right now, it's gonna be way easier, but it's still like there's new challenges that are coming up, and hopefully, if the tech keeps growing, you'll need more and more senior engineers, and those
Got it.
if there are so the thing with startups is they don't hire juniors or mid-level engineers at all. And the more startups there are, they're just going to try to suck up as much senior engineers as they can. So if the startup world keeps growing, they're going to just demand more and more engineers. So which is coming back to our point about the best investment that you can do is in yourself. Maybe pick up some tech skills because those are going to be growing in demand crazy. And the beautiful thing about tech skills, most of them don't require education. You might think that even being like data scientist or software engineer, it requires an education. It doesn't. So for example, Apple and Google are not going to require your education.
Yeah, they're not gonna look at your diploma or
They
your.
are going to look at it,
But if you don't have it,
and if you don't have it, it's going to put you at a disadvantage, but they're still can hire you. So that's the thing. People are throwing this those articles around that they don't require it anymore. They do prefer it, but
hmm.
it's not required anymore. So, for example,
Yeah, no, this is really cool. This is like revolutionary, honestly, to for the job market. Not only for the job market, but for basically anyone who doesn't have, let's say, an opportunity to go to college, you know, to still be able to learn, online or whenever, almost for free or maybe for a way cheaper price than in college. and be seriously considered for a high paid or high income job. That's amazing.
Yeah, and those jobs can be at a high level. They can be very lucrative. So
Yeah.
as we said before, the best investment is the one you can do in yourself, but that requires some dedication first, discipline, and savings. Um, so the way I went about it, whenever I try to, so for listeners, I didn't go to college for for software engineering, and the way I went about it, I quit whatever I was doing. I had like $10,000 saved, maybe less. But that was enough for me to go full on learning how to program. For about 6 months, I didn't do anything else. I just got into a room, closed everything off, and I was just dedicated to learning how to do software engineering. And as a result, I think my income over like next 4 years it like went up 5 times,
Yeah.
maybe more.
Yeah, that's a pretty good return.
That's what I'm talking about.
Yeah.
So like if you are dedicated enough, if you are, so it's not even about like how smart you are. Maybe some people cannot learn programming, but maybe
Yeah. No, I'm sure being average is enough.
yeah,
Like if you have average
with the
IQ or yeah, you can it's more about the consistency and how much you
you
want
don't have to be a genius to make good money in tech.
Yeah.
You could be a good engineer and like a good engineer working for like not even a public maybe company, maybe like consulting company. They're still gonna make like upward like multiple six figures salaries if they're senior enough. So like that's a worthy investment. And then from learning this industry, from being in it, you are going to be exposed to more and more opportunities. So always prefer to invest in yourself rather than stock market, or because basically by investing in stock market you're giving your money to somebody else.
Well, I mean, you are technically buying a part of the company
uh,
and you're owning a part of the company.
you do
Or you have to do it with that mindset.
see that's good and all, and that's I think it's like a clickbait. You're an owner of a part of a company now, but if you're gonna go on the streets and tell people, or oh, I'm an owner of Apple now because you invested in a couple of stocks, like a couple of shares of Apple, it's gonna be silly. Everybody gonna laugh at you, right?
Yeah. Well,
so you're not really an owner.
Yeah, well, I mean, technically you are. But what I'm trying to say is that yes, and you know, I don't know what percentage of a company you have to buy to be like considered.
I think you are an owner if you're on the board or can be on the board. I think that's.
I think the mindset is that you know you have to, when you're buying a part of the, or when you're investing in a company or buying a stock, I think you still have to think, okay, I am now like I'm going to own a part of this company, because it puts you in a mindset where you're thinking, okay, is this like do I want to be a part of, like, do I want to be a partial owner of this company? Do I want to, is it like, it just puts you in a mindset, in a different mindset. You're not just like throwing some money somewhere and then think about, oh, it will grow. It puts you more in like the long-term mindset where you're like, okay, you know, I think this company they're doing well. I think they're going to grow over time because this and that. And like, I would actually want to be an owner of that. So obviously if you go, you know, outside and if you have 2 shares of a company, yes, you're not an owner. But like, you still have to have that mindset.
I don't know if that mindset serves you really, but we can disagree.
Yeah. But with private investments, for example, you know, with our fund, when we invest in a company, even if we're not on the board, like we're still considering ourselves partial owners of
That's
it.
true, but you're probably not taking like 0.03%, right? You're probably getting significant share, right?
Me personally,
Your fund.
0.3% of the whole company. You mean?
I mean, what's the
Yeah,
percentage
yeah.
of the
It's
company?
not like, I mean, it can be more significant. Like we,
Yeah,
for example, own like 10% of
exactly.
10% company, or yes, yeah.
At
It's
that point,
more.
so potentially you could get on the board, right? So if you would demand the board seat, they'd probably give it to you.
Yeah, yeah. But what I'm trying
So
to say,
that's what I'm
even if
trying
you,
to say. That if you can get on the board or you are on the board, that means you're an owner.
well, you can get on the
Because
board.
you can have the
if you,
influence on that company with your share.
yeah, yeah. Well, that's a better way to put it.
Yeah.
And yeah, but I guess to discuss some, the rules are, yes, if you lead the financing round, if you're a lead investor in that round and you're putting the terms of that round, and you can claim or ask for a board seat, and that's usually the practice. So if it's an equity round, you get a board seat because you're investing a significant portion of the overall money, that capital that the company is raising, and then it's in your interest to like affect the decision making, not to have like an impact on overall decision making, but or huge effect, but at least to have a say, and then help the company to de-risk or mitigate certain risks, because founders and CEOs, or especially of young companies, they don't have that much experience, and they might still be very young.
Yeah, and juxtapose that to Sally, who bought 2 shares of Apple. I mean,
Yeah, no, obviously, but I still believe in that mindset, because it puts you, again, that thinking puts you in a different mindset, and you're just thinking about investing differently.
agree. Okay, I can agree with that.
Yeah, and I think this leads us to, so we talked about the inflation, we talked about the stock market drop, we talked about, again, inflation increasing prices, companies layoffs. What would you suggest to our listeners, since it looks like the economy is headed into recession? What would be your suggestions?
So, my suggestions are, usually the recession is where everybody makes the most money. Not everybody. I should rephrase that. That the smartest people and the richest are making the most money. So what is happening now is just money didn't really disappear. The amount of money is still there. So like so
redistribution or
it's just
reallocation of
huge redistribution. So let's say S&P, how much does that index control? Probably trillions of dollars, right?
Yeah, I'm not gonna misinform, so we can put it in the
Yeah, but
description or
let's
something.
say it controls $1 trillion
Yeah.
of value, and let's say it went down 10%. $100 billion ended up somewhere on some bank account, some balance sheet, some.
Yeah, and sorry, but yeah, S&P is gonna be definitely way more than that. 'Cause, like,
Yeah,
Tesla,
but I mean, I'm just trying to. It doesn't
provide an
control
example.
all Tesla, but just for example, so the money goes somewhere, and you just need to find a way to capitalize on that, and because like the Warren Buffett, everybody was wondering for the last 3 months. I've been seeing a lot of content wondering, why does Warren Buffett and Berkshire Hathaway, I think they had like $150 billion
Cash.
Apple had more than that. Why do they have so much cash, and why are they not deploying money? Because everything's going up, and
Well, with
they're
Apple,
losing money.
I think it's a bit different, because they're holding that cash in Ireland, right? because of the taxes. They're not like investing it or reinvesting it anywhere.
Well, they at some point they have to, right? Because that cash goes down in value. But I guess they were willing to take the cash going down in value.
Overpaying
So
taxes.
Mhm.
Overpaying taxes.
No, not even that, but they're willing to lose money on cash to wait for the right moment to invest. And so right now is the best moment to I wouldn't say to invest in a company, but if you can take over the control of the company, that would be a good time to do that. Because if you take over control of the company with a vision, with a plan, with your team, you can change the uh, you can change a lot about that company for cheap right now. And
But that's referring to bigger investors, right?
that, of
Or
course, that's for the funds and
yeah,
stuff like that. For the small investor, I would wish you didn't have money in your stocks, because right now, like right here, it becomes illiquid. The stock becomes liquid. You cannot
you don't
sell
want to
it
sell at
really.
loss. Yeah. But if
Yeah.
you have discretionary income, I'd say it's a really, really good time to deploy capital in stock market right now.
You would? I wouldn't.
I would, yes. I mean, in certain things, absolutely. I think it's a good buying opportunity. I think, and we're in that. But I'm trying to say, we may still go like the stock market may still go down, and for I guess as a side note, last week the market went into a bear market territory, and then on Friday it went up, so it got out of that territory. And how bear market is defined is it should decrease by more than 20% from its the 52-week high point. Um, and so I think the prices may still go down, but at the same time, I don't think that we're gonna see as large of a drop as we've already seen, because the markets have pretty much bottomed out.
Yeah. For regular people, I'd say that are not controlling like funds and stuff. Um, I'd say save a lot of money right now. Be careful because layoffs could happen. Um, it might get harder to find a job in coming years, and I would say save more money, invest into learning new skills, maybe technical skills. Engineering is great. Project management, design. What else? What other kind of
Skills.
technical skills you could learn? Maybe learn marketing.
We talked about like the what do you call those like a social media marketing or digital marketing skill set and
Yeah,
experience.
it is. So by this time, everybody's probably tired of those advertisements on learn a social marketing course and earn $1 billion a month not doing anything, blah blah blah. That might not be true, but what I discovered is it is really challenging to find the diligent social media marketer, somebody who will go in and set up Facebook ads for you, because business owners don't really want to mess with that. So it's a new technical skill they have to learn. They have to be good with computers. They have to know how to set up audiences, how to set up copywriting, how to set up visuals for ads, when to publish ads. So it is a technical skill that's easy to learn, but business owners are not willing to learn that. And it is very hard to find a diligent um, social media marketer, which
Yeah.
would seem it should be easy, right? Because people have been talking about it for years now. That people should start learning that, and there is a lot of money, blah blah blah. You'd think it's overblown by now. No, it's still in high demand. Um, and if you're able to translate that you're very diligent, that um, you have your processes figured out. So the business owners want to see how are they performing, what's next steps, or
Yeah.
um,
And I think it's also like a quality over quantity. And what you're saying is, and the discovery that you made, right? You can't find those diligent marketers, and it's also probably because they've onboarded a bunch of customers. Right? Could have, I don't know, 10, maybe 15, and managing 15 clients a month by yourself, it is a lot, and you're losing quality, for the sake of making more money. But at the same time, I don't think it's a clever long-term strategy. So definitely put like quality over quantity, because in the long term you want to have consistent customers who are willing to like rehire you again and again.
it's just, I think it's willingness to dedicate your time into building processes. Because for business owners, and if you're gonna start doing social media marketing, you're gonna be a business owner. It is challenging to focus on technical stuff, because you also have to focus on building your client base, marketing yourself, like
Sales.
patching the old like media that you already posted. And if you dedicate some time um, upfront into setting up those, I mean, that's kind of challenging to tell too, because you're not gonna know what you need to do before you run into those problems. But just generally being able to explain in layman's terms, um,
Yeah.
what you're doing, what the ads are doing, how much money we spend, what's the return, um, how it's deployed, what's the next steps, and all that. Because my girlfriend runs a photography business, and she was trying to promote it through Facebook ads. And we hired a guy who, it was impossible to get any answer from him. First, like, he wouldn't respond to messages. Second, he wouldn't like he would give us, sometimes he would give us like wrong numbers from, I guess, from other client that he sends to us, like
Yeah.
stuff like that. And then we would ask him, oh, did you, so she runs a local retail store for photography. She's like, why are people from Florida are texting me, or people from New Jersey are texting me? Did you set it up so we're local in like only
Targeted
targeting
apps.
the Los
Yeah.
Angeles? He was like, yeah. And then I have some experience with digital marketing. I go in and I see that he didn't set up any targeting
Yeah.
whatsoever.
Yeah.
So stuff like that. And I mean,
and
what's
it's
hard about
and
that?
it's crazy. It's so. But what it also means is, even though there are, you know, people irresponsible like that guy or that person, and they're still being hired. It's crazy, right? Like
They are, and he was making like maybe $1,000 a month.
just off
Yeah,
that,
he
off
wasn't
one client.
really doing anything.
Yeah.
I mean, he didn't even set up targeting.
Yeah, so that means, at least at that time, there was still demand, right? I don't know about now. Probably some businesses will cut
They will cut.
marketing expenses.
They will cut the people like that. I think
Yeah.
if you are diligent, they might cut the volume, but they're not gonna do it themselves, right?
Yeah, because it's, I mean, it's a full-time job, and
It is.
yeah, you have to understand exactly what, because time is your biggest asset. Like,
And
what do
also
you want to
that
invest your time
person,
into?
that person sets up like 15, 20 marketing campaigns a month probably. And what are you gonna compete with him, like setting up one campaign, your first campaign? He knows more about that. I mean, that guy
Yeah, but
clearly
it looks
didn't.
like if he can't deliver, then
Yeah.
it's not great. But yeah, definitely, I guess for our listeners, definitely invest in new skills. Yeah, save money, or if you have more discretionary income, maybe consider investing it in a stock market because you're not gonna buy at all-time high right now. And another thing with credit score, right? I think it's a good time to boost it now because, as we've mentioned in our previous episodes, the interest rates are going up. The interest rates for credit cards and for any sort of loans are going to go up as well. So it's definitely a good time to start either repairing your credit score by paying off your credit on time in order to eliminate increased APR for the loans.
So for example, last year when the credit APRs were at the lowest ever, I think. So your low credit score wouldn't affect your payments that much. It would still affect it, but like going from 2% to 3%, that's on a consumer loan, that probably from 5% to 6%, 7%. Right now, that same, like, compared to if you had 750 credit score and 650 credit score, 650 is pretty good still, like maybe 600, right? The difference that you have to pay every month on the same loan is gonna be like double, because there's less free money for banks to give away, and they're gonna try to make sure they're gonna get it back, because what was happening before, the Federal Reserve would come into market and would just buy the bonds. So the bonds are your it could be consumer loans, corporate loans, mortgages and stuff like that. So before the Federal Reserve, the banks would just give away money, and then the Federal Reserve would come in and just buy those loans, and then your payments would pretty much go through your bank to the Federal Reserve. And what's happening now is...
So I guess let's first, for simplicity, maybe we should provide an example.
So let's say
you get a car loan, let's say.
Let's say you get a mortgage. Or some... So, okay, let's say you get a car, right? So you get a car, the bank issues you a loan for, I don't know, 3% a year ago.
Yeah.
Pretty real if you get a good credit.
And let's say you got
2%.
let's say you got a mortgage of like a $500,000.
Yeah, so you buy a car, you get a 2%.
Oh wait, we're talking about car. Okay,
yeah, we're
sorry.
talking about car.
Let's say you got a $30,000 loan to get a car.
$30,000 loan, 2%. The bank's gonna put it on their asset, on their assets. So they have this note that you signed that you are obliged to repay them this amount of money with the percentage every year. So what they're gonna do is, banks don't always hold those loans, so those assets. So what are they gonna do? They are gonna try to sell it either to funds, pension funds, some endowments maybe, or those could be swept up by Federal Reserve. So that's the way Federal Reserve puts money on the market, by buying those bonds.
And bonds basically represents loans and debt.
Bond is whatever the paper you signed, pretty much bundled. Like you, your brother, and your sister signed the paper, and then the bank just piles them up and just sends it to sells it.
So when they are buying it when Fed buys it from a bank, like what's the spread? So obviously, like, bank makes some money on it, right? So let's say they got it for, I don't know, $1 million. So the loan is on a car, 30 grand.
I mean, we're gonna dive too deep if we go into that, but
they're selling it for profit, right? So
yeah, they're gonna just sell it for profit. They maybe borrowed money from the Federal Reserve at 1%, issued you a loan for 3%. The Federal Reserve got in and bought the the loan, and they made like maybe 1% on top of your transaction, or like it depends on percentages. But
And banks would want to sell those to Fed because
they want to issue more loans,
they want to issue more loans,
need liquidity.
right? And also it I guess decreases the risk, right?
Yeah,
Like you sell it right away, you get rid of it right away, you
there's
pocket
no
the
risk for you
the
anymore.
profit. Yeah.
Yeah. There might be still minor risks involved, but so they sell it away. What is happening right now? The Federal Reserve stopped buying those bonds. I think, or they either very much slowed down the buying, or they stopped completely. They might even sell those bonds. And so what happens is the banks are now thinking, okay, I might get stuck with this paper that you sign. And so they have to make sure that you return it. So if they send it to a pension fund and it's easy, or the Federal Reserve, they might not even care. Whatever, like you're not gonna pay. I mean, who cares? I mean, I already sold it. That's what was happening with the mortgage-based securities back in
2008.
Yeah. So, but not quite, but generally. And so they might get stuck with this paper if they're not able to sell it, and so they will have to make sure that they return it, so that you return the money. So the demand for a credit score might get higher. So you might need higher credit score to borrow, and higher credit score to for the interest rate to make sense, and bunch of like closing costs might go up and all that stuff. So banks are going to be very careful right now, because they need to make sure that they can return the money. And if the interest rates keep going up and they are not able to sell those bonds, so for example, if the inflation stays high and the interest rates go up, they only get like 2-3% on their paper, they're losing money.
Yeah.
Because they cannot borrow money from Fed at that rate anymore. So they will so right now the federal interest rate it's not crazy. It's actually super low right now. It's 1%. It's actually very, very low. But the mortgage rates went to 6% because banks are thinking, okay, the interest rates are going to go up. Mortgage are 30-year. The note is like 30-year. And they have to like look ahead and be like, okay, the Fed is going to raise. We might not be able to sell the note. Let's slow down. Let's only give money to people who we know can return it, and kind of pause on.
Yeah.
And in effect, there is less money in the market. So getting your credit score as high as you can is very important right now. Saving money, getting for higher down payment maybe so you can get better terms, higher credit score, very important if you want to buy any assets.
And I think with the I guess with those increasing interest rates, right? It also, so mortgage rates went up, as you said, and so with Fed fund rate, which is going up, and basically mortgage rates includes or already has future interest rate hikes priced in. And I believe so how it works with the Fed fund rate, it's like the rate at which the banks borrow money overnight from each other, right?
Yeah.
Because they need to have that liquidity. So they may borrow, one bank may borrow from another one, and that Fed fund rate is set by Fed Reserve. But yeah, just wanted to make it clear for the listeners.
Yeah.
Cool. Yeah, get your credit score up, save some money.
And we maybe will come up with the ways for you to get your credit score up on the next episode, or saving money tips, and dive deeper into those topics.
Cool. Awesome. Well, thanks everyone. I think that was episode number 4. And please subscribe, follow, comment, like, do all that stuff.
Yeah. Thank
Cool.
you guys.
Thank you guys.
Bye bye.